Hi. So today I wanted to just quickly chat about Peter Lynch's one of his famous numbers called the cash position of a company. So in his book on One Up on Wall Street, he details a few different numbers that you can look at when you're analyzing a company. And one of them happens to be the cash position. And I found a couple of companies with pretty solid cash positions, and I thought I'd use them as an example to demonstrate exactly what Peter Lynch is talking about when he's talking about companies with a good cash position. So the two companies that we're going to be looking at today, one of them is called Japan Petroleum, and the other one is called China Yuchai, both with excellent cash positions. So yeah, let's take a look. Okay, and so this is Japan Petroleum Exploration Co. We're going to calculate its cash position. Again, just come down to the balance sheet here and get its cash and short-term investments. All right, so this company has 1.274 billion in cash and short-term investments. I'm just going to bring up my calculator here, and I'm going to dial that number into my calculator. So 1.274 billion. Next, I'm going to take a look at the long-term debt. So this company makes it really easy. It has no long-term debt. So if there was a number there, I would subtract that number. I'm just going to do it anyways. So minus 0 equals. It's the same number because there is no long-term debt. And the next thing I'm going to do is I'm going to divide the amount of shares that are outstanding. So I can see here the shares outstanding are 54.3 million. So I'm going to divide that. And then that gives me the amount per share of cash. So Japan Petroleum Exploration Company has quite a bit of cash on hand. It has $23.46 per share in cash, which gives this a pretty good discount to the current share price, which is $33.80. So yeah, more often than not, this doesn't really happen, but this is a good example of a company with a lot of cash on its balance sheet. Okay, so this is China Yuchai International, and we are going to calculate its cash position. And so the first thing we're going to take a look at is the cash and short-term investments on its balance sheet. It has 703.8 million in cash and short-term investments. So I'm just going to dial that into my calculator, 703 million. Okay. Next, I'm going to look at the long-term debt. Long-term debt here is 0. So this makes it really easy. I just have to subtract 0. And voila, it's the same number. If there was some kind of debt there, you would just subtract that number. And then I'm going to look at the shares outstanding. Shares outstanding here are 40.86 million. So I'm going to divide this number by 40.86. 180. 40 million, roughly. And then hit equals, and there you go, $17.20 per share in cash. Okay, so this company is pretty good. It's got like quite a bit of cash per share. It's even better knowing that like you only have to pay $7.53, which is his current share price, for this $17.20. Okay, this doesn't happen very often. More often than not, it doesn't happen. But yeah, this is an example of a company with a lot of cash on its balance sheet. So yeah, check it out. Yeah, so just to chat a little bit more about like what Peter Lynch is getting at with the cash position, I'm going to read some excerpts from One Up on Wall Street where he talks about the cash position and why it's important to investors. So bear with me, it might take a little bit of time. I think this will probably be about around about 5 to 7 minutes to read through what he's got to say about the cash position, but it's totally worth it. So yeah, check this out. All right, so in this chapter, under reading the reports, he talks a little bit about Ford. In the top column, I'll just start right here. In the top column column marked current assets, I noticed the company has $5.62 billion in cash and cash items, plus $4.24 billion in marketable securities. Adding these two items together, I get the company's current overall cash position, which I round off to $10 billion. Comparing the 1987 cash to the 1986 cash in the right-hand column, I see that Ford is socking away more and more cash. This is a sure sign of prosperity. Then I go to the other half of the balance sheet, down to the entry that says long-term debt. Here I see the 1987 long-term debt is $1.75 billion, considerably reduced from last year's long-term debt. Debt reduction is another sign of prosperity. When cash increases relative to debt, it's an improving balance sheet. When it's the other way around, it's a deteriorating balance sheet. Subtracting the long-term debt from the cash, I arrive at $8.35 billion, Ford's net cash position. The cash and cash assets alone exceed the debt by $8.35 billion. When cash exceeds debt, it's very favorable. No matter what happens, Ford isn't about to go out of business. You may have noticed Ford's short-term debt of $1.8 billion. I ignore short-term debt in my calculations. The purists can fret all they want about this, but why complicate matters unnecessarily? I simply assume that the company's other assets, inventories and so forth, are valuable enough to cover the short-term debt, and I leave it at that. Okay, so right, and then in the chapter 13, Some Famous Numbers, he goes into detail about what the cash position. So we went over Ford's $8.35 billion in cash net of long-term debt. When a company is sitting on billions in cash, it's definitely something you want to know about. Here's why. Ford stock had moved from $4 a share in 1982 to $38 a share in early '88, adjusted for splits. Along the way, I'd bought my 5 million shares. At $38 a share, I'd already made a huge profit in Ford, and the Wall Street chorus had been sounding off for almost 2 years about Ford's being overvalued. Numerous advisors said that this cyclical auto company had had its last hurrah, and the next move was down. I almost cashed in the stock on several occasions. But by glancing at the annual report, I'd noticed that Ford had accumulated to $16.30 a share in cash beyond debt. As mentioned in the previous chapter, for every share of Ford I own, there was this $16.30 bonus sitting there on paper like some delightful hidden rebate. The $16.30 bonus changed everything. It meant that I was buying the auto company not for $38 a share, the stock price at the time, but for $21.70 a share. 38 minus the $16.30 in cash. Analysts were expecting Ford to earn $7 a share from its auto operations, which at the $38 price gave it a PE of 5.4. But at $21.70, the price had a PE of 3.1. A PE of 3.1 is a tantalizing number, cycles or no cycles. Maybe I wouldn't have been impressed if Ford were a lousy company, or if people were turned off by its latest cars. But Ford is a great company, and people love the latest Ford cars and trucks. The cash factor helped convince me to hold on to Ford, and it rose more than 40% after I made the decision not to sell. I also knew, and you could have found out on the annual report, still in the readable glossy section, that Ford's financial services group, Ford Credit, First Nationwide, U.S. Leasing, and others earned $1.66 per share on their own. Ford Credit, which alone contributed to $1.33 a share, it was its 13th consecutive year of earnings growth. Assigning a hypothetical PE of 10 to the earnings of Ford's financial business, finance companies commonly have PE ratios of 10, I estimated the value of these subsidiaries to be 10 times the $1.66 or 16.60 per share. So with Ford selling at 38, you were getting $16.30 in net cash and another $16.60 in the value of the finance companies. So the automobile business was costing you a grand total of $5.10 per share. And this same automobile business was expected to earn $7 a share. Was Ford a risky pick? At $5.10 per share, it was an absolute steal, in spite of the fact that the stock was up almost tenfold already since 1982. Boeing is another cash-rich stock. In early 87, it sold in the low 40s, but with $27 in cash, you were buying the company for $15. I tuned into Boeing with a small position in early 88 and then built it up to a major one, partly because of the cash and partly because Boeing had a record backlog of commercial orders yet to be filled. Cash doesn't always make a difference, of course. More often than not, there isn't enough of it to worry about. Schlumberger has a lot of cash, but not an impressive amount per share. Bristol Myers has $1.6 billion in cash and only $200 million in long-term debt, which produces an impressive ratio. But with 280 million shares outstanding, the $1.4 billion net cash, after subtracting debt, works out to $5 a share. The $5 doesn't count for much, with the stock selling for over 40. If the stock dropped to 15, it would be a big deal. Nevertheless, it's always advisable to check the cash position and the value of a related business as part of your research. You never know when you'll stumble across a Ford. As long as we're on the subject, what is Ford going to do with all of this cash? As cash piles up in a company, speculation about what will become of it can tug at the stock price. Ford's been raising the dividend and buying back shares at a furious pace, but it has still amassed excess billions over and above that. Some investors wonder if Ford will blow the money on you-know-what, but so far, Ford has been prudent in its acquisitions. Already Ford owns a credit company and a savings and loan, and it controls Hertz Rent-A-Car through a partnership. It made a low bid for Hughes Aerospace but lost out. TRW might create sensible synergy. It's a major worldwide producer of automotive parts and is in some of the same electronic markets. Furthermore, TRW could become a major supplier of airbags for cars. But if Ford buys Merrill Lynch or Lockheed, both were rumored, will it join the long list of diversifiers? So, yeah, that is Peter Lynch's explanation on the cash position and why it's important to take a look at the cash position with businesses that you're thinking about maybe investing in. So I hope that helps you with your interest in becoming a do-it-yourself investor. If you're find this of value of some kind, make sure you subscribe to the channel. You can also go to my website, peterlynchinvestor.com. There's lots of content there for people who are interested in do-it-yourself investing. So check it out. And thanks for your time and have a good day.